Hi all, today we're going to talk about Intuitive Machines or about LUNR, their ticker. It's one of the most exciting news from last week and in general one of the most interesting stories that I've seen pretty much this year. Because imagine to yourself, you have a company with a market capitalization of about $300 million. You have a company whose revenue is around 24 million bucks, so small, young, growing company. And suddenly this company gets a deal with NASA for about $4.8 billion. So a deal worth about 12-13 times more than the capitalization of the whole company. So how do you value this company right now? Is this an amazing opportunity for the company to grow 5-10 times over the next couple of years? Or is it just a fade who's going to just go away? We're going to talk about all of this right now. We have invested hours into research of this company, into preparing this video. We have done this to get you this information. What we ask in return is for your likes and subscribe, so please press this like button right now, subscribe to our channel, and let's start with the video. Intuitive Machines were founded in 2013. It's a space infrastructure services company with a focus on establishing a lunar infrastructure. Actually, the goal of the company is to create a lunar settlement, which sounds pretty cool. The problem is that the company says it wants to expand commercial space exploration, and suddenly I'm starting to think about Virgin Galactic, and I kind of have this bell in my head which says do not come close to this company. But they are a little bit different. So the company right now already working with NASA. They have already a very successful Nova C moon lander, and it is a part of NASA's commercial lunar payload services program. By the way, stick around until the end of this video, because at the end we're going to discuss what to do with the stock of LUNR and which catalyst to the upside and to the downside is expected for the company. More recently, they have successfully operated to transport more than 100 kilograms of scientific payload to the south pole of the moon. I don't understand a lot about transportation to the moon, but I've read that this is an amazing accomplishment and this is actually very hard to achieve. So the company's operation is not only with NASA. The company has a lot of collaboration with a pretty successful companies, big ones like Lockheed Martin, we'll talk about that, and they have collaborations with pretty young and very interesting startup. So the company has partnership with KBR, science and engineering firm, and with X Energy, which is firm which specializes in nuclear reactors and fuel designs. The company also has contracts with some defense companies like Northrop Grumman and Lockheed Martin. So the company is not operating only on these NASA contracts, it has contracts and partnerships with other companies as well, which actually differentiates it from Virgin Galactic, which we talked about before. If you find this information valuable, press the like button and subscribe to our channel. We have a lot more valuable information already on our channel and even more coming soon. The second problem is that the company went public in 2021 via SPAC. Now, I know what you're thinking. You're thinking, Vadim, but isn't all big companies that went public via SPAC, especially in 2021, are kind of crap? And yes, we're thinking about like Clover and Virgin Galactic, but for all of these companies, we also have SoFi, which kind of seems okay. So let's not disregard LUNR for now. Now let's talk about this contract, because if you want to invest in LUNR, you need to understand how this contract is structured and how it's going to go on company's books, because this contract is going to be the company's financial for the near future. So we are talking about the contract for communication and navigation services for missions in the near space regions, and here are some key points. First of all, the contract is for 5 years. Second of all, the contract starts on October 1st, 2024 and ends on September 13, 2029. Why is this important? Because when you are going to look at the company books, the revenue from NASA is going to start on October 1st. October 1st is the first day of Q4. Right now, the company kind of announced their results for Q2. So the next time they have a quarterly results for Q3, you will not see any financials from NASA. So don't be surprised if you're kind of expecting a lot of money in the revenue section and you go and look at the results and there is nothing there. So it doesn't mean that the deal is off. It just means that the revenue will start in Q4. The company also signed a possible extension with NASA for another 5 years, so from 2029 until 2034. The contract will focus on scaling lunar lander operation, providing 4K resolution and navigation services. One of the most interesting parts of kind of this contract and the whole project is that the company is going to create a satellite constellation around Moon, which kind of will ensure enhanced data transmission, automation in the communication, and just general good experience of astronauts who will come to the Moon and their communication back to Earth. Now let's talk about the stock and let's talk about financial and what does it mean for the company. And it's pretty interesting. So pay attention to this. In Q2, LUNR generated $41.4 million in revenue. And by the way, in Q2 2023, they generated around $18 million. So the company is growing and growing fast even without this NASA contract. It reported operating loss of $28.2 million compared with $13.2 million a year before that. So kind of with the revenue growth comes operating loss growth, which is, again, it's okay for this company. The company is losing money and that's fine. The company is growing like 3 times year over year, so it's okay for them to lose money. The company has about $32 million in cash and virtually no debt. So right now I'm giving you the pieces of the puzzle, and after that we're kind of going to assemble all this puzzle together, so all of these pieces of data are not just random. The company just now recently raised yearly guidance even before the NASA contract, stating that it will bring between $210 and $240 million, indicating 2.6 to 3 times year-over-year growth. Now, everything, of course, has changed since they signed the NASA contract. We don't really know how much they will bring additionally to their revenue each quarter. Some analysts expecting that the additional revenue will be between $350 and $500 million in 2025. And here's an interesting part, because if the company is guiding for around 200 and change million dollars, and they will bring about $400 million additionally from this NASA contract, that means that the company in 2025, it's kind of safe to assume they will bring around $600 million. And here's the kicker. It's more than market capitalization of the company right now. So you're getting a young growing company who's growing 3 times year over year in a pretty good sector, pretty cool one and kind of with a lot of buzz, which is growing 3 times, which is selling for less than 1 price to sales ratio. And this is why everyone's kind of excited, and this is why you need to decide if you want to do something with this opportunity right now. Because what we're going to talk about right now is the near-term catalyst for the company, for the upside and also for the downside. Because if you're going to invest in the stock, you need to be prepared for what's about to come next. So first of all, analysts. Analysts, even before the NASA deal, were expecting the company price to be between $10 and $12 per share. Right now, as we are recording this video, the price is about $9.5. Now, I have searched and I haven't found any analyst that has upgraded their guidance for the kind of price target for the stock. It's not because they don't believe the company should not be worth much, but usually it takes analysts about a couple of days up to a week to raise their target price for the company. And this is about to happen. And I think about 3-4 big firms and big analysts will start raising guidance for the stock. And each time this will happen, stock price is gonna jump up. So this is the first catalyst which you should know about. That if you're going to buy this stock, for example, on Tuesday, it's really possible that you have good news by the end of the week and the stock will already jump up. The second thing is pretty similar to what we talked about when we did our video on NEO. So we have kind of pieces of the puzzle who will come together at the end, at the annual report or quarterly report. And in NEO stock, when we talked about NEO, we have discussed that we have like monthly deliveries for the company, and if you're starting to extrapolate them to the quarterly results, it looks like NEO is going to have a very good quarter and the stock price is going to go up. And this is pretty much what happen, what we described in the video. So here it's pretty much the same. We have talked about that as soon as kind of everyone understands that the company will be selling for less than their revenue, the stock price is going to jump up. So this is the second catalyst which you should know about. The third catalyst is the negative one, and it's going to come 100%. Because remember, I've told you that the operating loss for the company is about $20-something million in a quarter. The company has $32 million in cash. The company needs to operate somehow. It needs to burn cash to kind of grow and to continue its operation. What the company will do, and it's a 100% certainty that this is going to happen. If the stock price is going to go up, the management of the company will issue more shares and sell them to kind of boost their balance sheet. And it's okay. It's normal. It's what companies do when the stock price is going up. And this dilution is going to keep kind of the stock price down. So you have two catalysts up, one catalyst down. In general, I think it's going to be a fascinating story. In general, I think the company for now should be worth at least $16-17 per share. We're going to know more when we kind of have the first glimpse of the financial from the NASA deal. It's going to be in Q4. We're going to know more about how to evaluate this company. Hopefully you found this video informative. We liked very much researching about this company, about this whole weird situation when suddenly a deal worth like 12 times the market cap of the company comes around and no one really knows what to do and how to evaluate the company now. If you like this video, press the like button, subscribe to our channel, and we will see you in the next video. Take care.